All right, welcome everybody to today's client support webinar. My name is Bennett McDowell with traderscoach.com. Today is August 2nd, 2023. I hope everybody's doing good. So let me bring on Jean and see if she has anything she wants to talk to us about today. She handles all the admin for our company. And usually when you call in or talk to anybody, it's going to be Jean. So Jean, let me bring you on. And if you have any updates or things you want to talk about, feel free.
Well, I want to know, how did it become August already?
I know, right? You'll
Summer
blink,
summer's
you'll
moving
blink,
along.
it'll be Labor Day.
I know. Well, of course, as always, welcome everyone. And if you can hear the audio and see the webinar screen, just give us a hello in the questions area on your GoToWebinar panel. And I guess my favorite thing to say is come join us on Stock Analysis Friday on YouTube on the traderscoach.com YouTube channel. That is on Fridays, every Friday at 8 a.m. Pacific time. So yeah, it's an awesome event and we'd love to see you there. And I guess that's about it, Ben. So back to you.
All right, thank you. All right, so let's go ahead and get started. If you have any questions, because this is your webinar, I'll cover a couple things that for educational things, but again, that does not supersede the questions that you have, because that's the purpose of getting together. All right, so first thing I got to go over the risks involved in trading. There are risks. We deal in a realm of probability. Past performance does not guarantee future performance. Hypothetical performance does not guarantee future performance, and that's of course simulated performance. So you have to be aware that there are risks, but there's risks in everything we do in life, right? And so we want you to know that you can somewhat control your risk by calculating your trade size, and we have a whole course and books and material, educational content on how to do that. And to be a successful trader, you're really going to need to be able to do that. So that's a point that you don't want to skip over. It's nice to have an edge. In other words, your win probabilities, but the other portion of it is risk control. You got to have an edge there too, and we can help you with that. And then also too, make sure you contact your financial advisor or accountant or whoever manages your money before taking any of the actions that we may suggest here, because we don't know your personal situation, they do. And of course, some of these things that we talk about may or may not be suitable for you. And sometimes short-term trading is not suitable for some people. So definitely check that out with them. Also trade with money you can afford to risk, called risk capital. All right, so we have a bunch of books, or I have a bunch of books out there. My latest book called The Art of Trading is all about, I think it's gonna be one of my best books, because there's concepts in there that I'm really going into great detail and that are very appropriate for today's markets. And then of course, also we've come out with a lot of software since our original book, The Art of Trading, that came out in 2008. So that's going to be covered as well. And then I've got money management books for the risk control that we talked about, and then Elliott Wave and Survival Guide for Traders. Also, too, software. Many of you here have our software, of course, that's why you're here. And you can, if you don't have it all, you can buy it a la carte. Okay, we have bundles, but you can also buy it a la carte. Also, too, we have a 30-day trial for $399. If you want to check out all the software on trial, you can do that. And then after 30 days, if you want to purchase it, you can. Most people do that. All right, and so let me get out of here. I'll go to TradeStation here. But before I jump in here, I wanted to cover a couple things here. And again, if you have any questions, feel free to go ahead and type those in. But some of the things I want to talk about is, have you often heard me called connecting the dots? I'm just going to put dots up here. What does that mean, connecting the dots? Anybody? What does connecting the dots really mean? And what are the dots? Okay, trading rules, right? All right, so rules, trading rules, that's a good one. All right, so trading rules basically are the dots. And when we talk about the dots in the way in which we trade using the ART software with our AL, PTF, TLM, etc., we are trying to connect the dots. So let's go through some of the dots here. All right, first of all, there are software dots that we connect. So I'm just going to put software. And then there are other forms of technical analysis. I'll just put tech. Doing this with my tech dots. I'll call them. I'm writing this in with my mouse, so you know it's not always that easy to do that well. Not bad. All right. So let's talk about the software dots first. All right. So what are some of the software dots we use? Well, we use the pyramids, right? The art software. Pyramid dots. So that's one thing that we look at before we take a trade, right? We also have other dots. What are some of the other dots? I'll let you tell me. What are some of the dots? The owl and the PTF, right? Okay, owl, PTF. What about the trend line master? Let's put that down too. And what about the ERI? Let's put that down too. What about art reversals? Let's put that down too. All right. All right, I guess I'll put art pyramids up here and art pyramids here. Every time you write with a mouse, you always look like you're in grade school. All right, art pyramids, OWL, PTF, TLM, and ERI. All right, what are some of the other tech? Oh, risk calculator. Good job. Who was that? Alexander. Good job. So I'm going to put the trade size calculator. Okay, I'll just put that, or the risk to reward calculator, which is even better, right? All right, so what are some of the technical dots that we like to connect? I guess I'll put dots over here. What are some of the technical dots that we look at? How about Elliott wave, right? I'll put down EW. Elliott wave. What are some of the others? How about fibs? Because you're always seeing me draw fibs, right? What are some of the other technical dots that sometimes I use? You ever hear me talk about inside price bars? You know what that is? I'll go over that if you don't. I'll call it inside bars. Anything else? How about inflection points? You've heard me talk about that, right? Okay, so when we go to look at a trade, we kind of have a lot of these dots that we look at, and they may seem like an awful lot, but when you start using them every day, they're all in your mind and they're very quick to do it. That's why, a lot of times you'll say, I'll look at a chart and I'll very quickly summarize whether I should be long, short, or out of the trade, right? And it's because I've used these type of techniques so long that they become just, a normal habit for me. And therefore, I just automatically use them. When you first start out, they may seem like more of a checklist, but the more you use them, the more you internalize them, and it becomes very quick. So let's just count them. We got 1, 2, 3, 4, 5, 6, 7. All right, so 7 software dots. And we got 4 of the technical dots. So that's 11 dots, right? Total. 11 dots total. Now, if we wait for all the dots to line up perfectly, do you think we're going to trade a lot? Probably not, right? So there comes a time where, you try to line up as much as you can, but also too, depending on your style of trading, it's going to determine how many dots that you find based on your performance usually develop a winning edge. So for example, all right, art reversals. Do I use those much for entering the market? Not really. I use them to scale out, but not entering. But also too, I can use those for scalping. So scalping, I'll put scalping, in or out of trades, or that's pretty, scalping in or trades or just scalping, right? So that's the art reversals, and they're pivot points, right? What about the ERI right here? Do I use that for entries? No, usually for exits, okay? Scaling, okay? Usually for scaling. I'm put scalping, I'm put scaling down here. That's the other one I want to put down here. Scaling here. And so exits, scaling, okay? All right, what about the TLM? You usually don't find me using that for entries very much, do you? Why? Well, that's because it's an indicator that is more helpful once a trend is more mature than it is when I'm trying to get in the beginning of a trend, right? So I don't always use it. I do always use it for add-ons, which is scalping in. So I'll put add-ons. How's that? All right. So now what else here? Let's go to the technical dots. Elliott wave. Yeah, I use that a lot for everything. Fibs, I use that a lot for everything. Inside price bar. So when a price bar is inside, like in this example here, that's what, let me erase that. That's what it looks like, okay? An inside price bar. So let's say you have something like this, and then you have something like that, right? And it could be a candle, it can be anything. But that's kind of what they look like. Regardless if it's a candlestick or open high and low close price bar, what's important is that the price bars right after the inside price bar, so those are going to be the ones over here. If they go above the inside price bar, then it's usually good for 2 to 5 price bars. If it goes below first, it's good for 2 to 5 price bars in that direction. So I find that to be really helpful. If, for example, I'm looking at an entry based on some of the other dots, and I'm kind of determining, should I take this position now or should I wait for a little bit better price? And if I get the inside price bar, that sometimes gives me a clue. Okay, so just food for thought. So that's something I use sometimes, inside price bar. Inflection points are nothing more. Think of inflection points as whatever the 50% retracement is on any recent high or low, okay? And sometimes I like that because if I'm in a position and the position's gone on for a while, chances are it will go, there'll be a little profit taking down to the inflection point. So if I'm thinking about my stop, I want to make sure I don't move my stop to the inflection point or else I'll get stopped out, okay? So I might want to keep my stop sometimes or use a pyramid below an inflection point. All right, so these are all the things I think about. Now, if I'm trend trading, for example, pyramids, OWL, and PTF. So those are 3 dots right away I'm going to use here, right, for trend trading. If I am going to use technical dots for trend trading, I use the Elliott wave and I use fibs. And I use fibs to determine my target, but I also may use fibs to determine when a market has retraced down to a fib and I'm ready to get back in it to go in the direction of the next move. So fibs can be used for targets to either get out of the market or targets to get into the market. So I like to use those, okay? So right away for trend trading, I've eliminated a number of dots. So I use 3 over here, the art pyramids, the OWL, PTF, and then I use probably 2 for the most part over here. So now I've got it down to 5 dots. All right, and that makes it very reasonable to look for different types of trades. Now, when I look for trades using the pyramids, obviously I want to trade in the direction of the pyramid. And I want the owl to be also the same color as the pyramid. So if it's a bullish pyramid, then I want a bullish owl, right? And that's going to be green. And the bullish pyramid will be green. All right. I don't want to go against the PTF. So as long as the PTF is yellow or the same color as the pyramids and the owl, then I'm good to go. That confirms or increases the probability of my edge to take that trade. All right. Now, if I didn't want to use any of the technical dots like the Elliott wave or anything like that, and just wanted to trade off the software, well, this would be, I would take the trade with 3 dots. Okay. If I want to use Elliott waves and fibs for a target, then of course, those are dots I can add on. Now, one more very important dot here you always have to use, regardless if it's a scalp trade or this, is this baby right here. Okay, so that is the risk reward or the trade size calculator. You got to calculate your trade size and preferably your risk to reward. All right, so when I take a trade and I'm going to make it a trend trade in this example, I've used the ARC pyramids, I used the owl, the PTF, and the risk to reward calculator. You have to at least use those, right? And then I'll enhance it by using Elliott waves and fibs to get a target zone. And from that, I can tell if the trade is viable to take. Any questions on that? Any questions on that? Now, that's a trend trade. Let's say I want to do a scalp. And what's a scalp? A scalp is basically not worrying about what the Elliott wave is, not worrying about the target based on fibs. It's none of that. What I use for a scalp trade usually, sometimes the fibs, but usually I'll use the PTF, okay? And sometimes I'll use the pyramids, and I might use the reversals. And the idea is I use the PTF to determine the target. Now, sometimes I'll replace the PTF maybe with fibs, or I'll use the fibs in combination of the PTF. And the pyramids are not necessary for a scalp trade. You can use them if you want, but they're not necessary. All right, inflection points. So we haven't really talked about inflection points. We haven't talked about some of these other things. So what I've talked about is scalping and trend trading. So those are entries to trends and entries into scalp trades. So where does inflection points come in? Well, once you enter the trade, then you have a situation where you're managing the trade, right? And so when we manage the trade, we use a whole different host of dots. For example, we'll use the pyramids for stops. We'll use inflection points to make sure our stops aren't on pyramids too close. We may use fibs as well because we got to manage the trade to see on target zones and things like that. All right. We will use on managing the trade. Once the trade's in, we'll use the ERI for possibly scaling out. All right, and our reversals. So when we manage a trade, it's a whole different combination possibly of the dots. So there's certain dots we use to enter, whether it's a trend trade or a scalp. Certain dots we use to manage the trade. And trend line masters can be used to manage the trade because it draws trend lines, and we can use that to scale out. So that's I think an important part of learning how to trade the markets using not only our software but integrating it together with some forms of technical analysis that complement the software, okay? Can be used along with it. Any thoughts on that? Did you find that helpful? Now, some people may not like to scalp. Some people may not like to trade in a fashion that doesn't match their personality, and that's fine, because we've given you enough dots, a total of 11 dots, that you can decide which ones you want to use to match your style of trading. And then, of course, once you find a comfortable number of dots that work for you, then test that to be sure, of course, that you have an edge, right? That's really important. All right, so let me come out of here. I'm going to erase that, come out of here. All right, and here's TradeStation. And if you have any questions on that, let me know. And here is this. So let's just look at some of the dots, okay? All right, now let me ask you a quick question. All right, let's just isolate this one area here. All right, this just happens to be TLT. And I can bring up another stock if you want. So if we look at TLT, all right, let's look at some of the dots. So pyramid, take a look at the software dots. That's pointing down, okay? So if we were to go short on this pyramid, we want to make sure that we wait for a red owl, right? Now, we don't want to go short on an PTF that's green, but red is okay and yellow is okay. So that's okay there too, okay? We don't use the trend line master, nor do I use the emotional reader index to enter a trend. So those two dots are good enough for me in terms of the software. And then I look to see what the possible Elliott wave is on this, okay? And so the next dot is, do you think this is a major bottom in here, or do you think it's going lower? Well, this is indicating lower, this is indicating lower. So chances are that's not a major bottom. So maybe we can use the help of fibs to kind of get an idea maybe where a bottom could be on this. All right, so it may be going down quite a bit lower, right? So at the very least, we're not going to go long here, but maybe a short trade would have made sense back up in this area at that particular point. And again, then you can choose what time frame you actually want to do your executions on. Any thoughts on that? So I wanted to share that today. We're almost at the end of the session, but that's kind of something I wanted to go over with you today, to kind of just see if that kind of helps you round out how to use, you know, the information that we talk about here. And it doesn't matter, you know, if it's an ETF, a future, a stock, it just doesn't matter, okay? It's the same type of analysis. Doesn't matter if you're using this or you're using, if you're using TradeStation, no matter what platform, same type of thing, okay? And also too, the number of pyramids and how many P pyramids you have. The more you have, the more risky the trade is going in that direction. For example, after 4 pyramids, all right, you're getting into the mature part of the trend. So the idea is you want to get in here and enjoy enough of the ride up to make some good money, right? And then your stop would be here if it goes into a major correction. So the pyramids are doing a great job because they're giving this market enough time to breathe, not to take you out too early. But at the same time, if that gets taken out, then chances are we're going to go down to this fib retracement area before it resumes back in the direction of the trend. Okay. All right. So that's it for today. So if nobody has any more questions, I think we'll go ahead and call it a day. We did record this. So don't forget the recordings are going to be put into our YouTube channel and they're hidden. So you have to use the link that's located in the client VIP area. That's that area where you log into. And the link is in there for the recordings, and it will take you to the recording area on our YouTube page. And we keep those private because this is basically for our clients only. We don't want the general public kind of peering into all this stuff because you may ask a question, specific question, and a personal question, and we think we need to keep that secret, personal for you guys. All right, so that is it for today. Have a good one, and we'll be back again here next Wednesday. Thanks so much for tuning in.